Hello, how are you? Hope you are all doing well. I'm Dr. Labi from Dr. Labi's Academy. Today we are going to start with respect to ACCA, F6 taxation, UK taxation, Financial Act 2022, and this is valid till March 2024 exams. I kindly request you all to please subscribe to this channel, share this channel, see it till the end, and hopefully it will benefit you. Any comments, plus or minus, you are always welcome to post the comments. That is more beneficial to me, so that how best we can work it out. This is with respect to section C. Okay, as you know, in section C you have 2 questions for 15 marks and 1 question is for 10 marks. Fine. And this is related to corporation tax basics and administration. Right? Corporation tax basis and administration. Apart from that, is it right? We will have. I'm talking about. On my channel you will come across F6 UK taxation. You will come across F7 financial reporting, F8 audit and assurance, F9 financial management, and even recently I started from this exam onwards, I have started SBR also. Fine. Anything, any comments you wish to add, you can add, and we can work it out accordingly. That this is related to section C, corporation tax basics and administration. Okay, first and foremost we will see what are the requirements. Is it right? Requirements are the first requirement is calculate Harbour's limited corporation tax liability for the 4-month period. They are asking 4-month period. Definitely the moment we will go through the question, we will come across the situation and the information related to this. Note, your computation should commence with the operating profit of 715,500. Fine. This is for how many marks? This is for 10 marks. Okay. Next. What is the second one? They are saying that the directors of Harbour Limited now realize that it will be beneficial for the company to prepare accounts for the year ending 30th November 2023. Is it 30th November 2023? Here what they say? They say 31st March 2023. Is it? They said 31st March 2023. Now they are saying that it is beneficial for the company for the 30th November, means if you take the thing 31st March, first it is for 4 months. Is it right? First for the 4 months. Then they want to make sure that they want to make it to extend 30th November, means April, May, June, July, August, September, October, November, means 8 months. Is it? Means here it is going to be 4 months. Is it right? It is going to be 8 months. Okay. This is very, very important. Okay. 8 months. They want to extend it rather than a 4-month year ending of 31st March. Means they don't. They don't want to have 4 months and subsequently for 8 months. They want that it is better to have a straight 12 months ending 30th November. This conclusion is based on the following information which is available with respect to 1st April to 31st. This information is related to from 1st April to 30th November. Make it sure. These are very, very important. These are the basics, okay? Very important. Means what this information is related to from 1st April. The previous information is related to till 31st of March. What is the requirement? First, what is the difference between a tax evasion? What is the difference between a tax evasion and tax avoidance? Fine. See, in the examination, they will give one question on ethics. Okay, one question. You have to make sure that what is the basic difference. You should not write general. You have to be very specific in doing this. And how HMRC are likely to view the situation if Harbour extends the accounting period. They are extending the accounting period till now 30th November, okay, to save corporation tax. 3 marks. Okay, next. If Harbour prepares account for the year ending 30th November instead of 31st March rather than period ending 31st March, how the revised figures will be included and how we are going to treat capital allowance and chargeable gains. See, this is most important thing, and we say it is a basics, but it talks about the core values. Okay, it is for the year ending 31st of March for 4 months. They are planning to extend it to the 30th November. There are some expenses which are related to from 1st April to 30th November. These things should be segregated. Okay, these things has to be segregated. Fine, we will do that. Okay, we will do that. Next, what they say, you should assume today's date is what? Today's date is 25th March 2023. See the things. This is from, there is a 31st March, there is a 31st March 2023 and there is a 30th November 2023. Okay, that's very, very specific. Okay, we have to be very, very cautious about the dates. Harbour has previously prepared accounts to 30th November but has decided to change its accounting reference date to 31st March to be conterminous. Conterminous means in line with corporate, means we have to in line with corporation tax financial year. The company forecast draft statement of profit and loss account for the 4-month period. Fine. This is the information for 4 months. Okay. This is the information for 4 months. You have the operating profit, you have the property business income, we have chargeable gains, and we have interest paid. Okay. We have interest paid. Good. Depreciation 11,760 and amortization leasehold property have been deducted in arriving the operating profit. Is that? Means you have, what we have to do? We have to add back the depreciation and we have to take out the because it is a non-operating expenses. Is it right? Non-operating expenses. We have to add back. Okay. The reason for every point we are considering it, we have to give a logical reason why we are doing this. That's very important. We should not blindly go for it. Okay. Depreciation and amortization of leasehold property have been deducted. We have to add. What the reason? Because it's a non-cash expense. On 1st December, Harbour acquired a leasehold building paying a premium of 78. What is the year of lease? 20 years. The office building used. See, what is the formula? Formula is 51 minus n divided by 50 into premium. Okay, into premium. How many years? Is it right? You will get value. Is it right? You will, but divided by 20 years. Is it right? Whatever you will get things, it has to be divided by 4 by 12. Is it? This is what is for the 4-month period. We will do this. immediately we have to make sure that what we have to do, okay, so that it will be easy for us to have a while doing this. In the examination also you have to do. Harbour lets out freehold warehouse which has a surplus to requirements. They have on 31st December the tenant paid rent. Is that the tenant has paid rent? How much they have paid rent? It is an income for them. Okay, it is tenant has paid rent for, it is income for a 6-month period. Again we have to take it for 4/12. Okay, on 1st December Harbour paid insurance for how much? 1,000 for the year ending. Here they have paid insurance. Means when you have paid insurance, again we are preparing for 31st December. Sorry, 31st March. When you are preparing for 31st March, you have to deduct insurance for how many months? You have to deduct insurance for 4 months. Means we have to add rent for 4 months. We have to deduct insurance for 4 months. The interest paid, the chargeable gain is in respect of the disposal of investments. 10th March, no indexation allowance is available for. Okay, we will take that into consideration when it is. The interest paid in the, see this is with respect to interest paid, point number 4, note number 4. The interest paid in respect to Harbour 6% loan with interest for 6 months of how much? 24,000. Been paid when they have paid, fine. This is the same amount what is given, 24,600. Interest of 12,300 will be accrued. Is that will be accrued means they have to pay. Is that on how much is there? 12,300. Fine. And with the corresponding accrual is how much? See, interest paid on respect of Harbour's Limited 6% loan notes with interest for how much? 6 months. When we have paid, it is for 1st January. How much? Interest of 12,300. Fine. And a corresponding accrual has been there on first. Accrual means it is the last year. Is that how much is there? 20,000. This amount has to be added. This has, because it is an accrual, it has to be deducted as on 1st of December 2022. The loan notes were issued in order to finance trading activities. Okay, now the tax return down allowance of both main pool and special rate pool was nil on 12th December 12th January 2023. Harbour purchase plant. Is it right? What is the expenditure limit? The expenditure limit is how much? The expenditure limit is 1 million pounds. Okay, the expenditure limit is 1. Means you will get that, and you will have how much they have said? It is 548. Is it right? 548. But we are not taking expenditure limit for 1 million. Is it right? We have to take the expenditure limit how much? To the extent of only 4 months. Okay, we have to take, means we are eligible for 4 months only. Okay, out of 1 million, and whatever the balance we will get, you have the first year allowance. Is it right? First year allowance is how much? On the special rate pool. On the special rate pool, first year allowance will be 50%. Okay, first year how much? At the rate of 50%. Fine, we will take that into. It's easy, it's not difficult. Fine. Now slowly we will work it out how it is best going to be possible. Fine. Now first the point number A. Harbour Limited Corporation tax liability for the year ending 4 months. Okay, for year ending 4 months. Make it very clear. Is it 31st March 31st March 2023. Now, once you have done like this, now other things are very easy. Is it right? Other things are, this is for only 4 months. Now, you have the operating profit. How much? They said very clearly, the operating profit, you have to start operating profit. It is given where? It is given in it is given in note, okay? It is given in note 715,500. Is it operating profit? How much is there? Put the pounds 715,500. We have to add what? We have to add depreciation. Right? We have to add depreciation. Depreciation is how much? 11,760. You have to add amortization. Okay, amortization. How much you have to add amortization? 1,300. Fine. Okay. Next, there is a leasehold premium. Is that we have to deduct premium. Okay, deduct premium. See, I will only write here. Is it right? I have given formula there. 51 minus 20 divided by 50. Is it right? Divided by 50 times. What is the premium amount? Premium amount is 78,000 divided by how many years? It is for 20 years. We have to take for 1 year. Fine. Multiply by 4 by 12. Okay. See, 51 minus 20. See, when you are having a concept like this, be very specific. Okay. Just you can write like this. 78,000 divided by 20 times 4 divided by 12. Is it right? How much you will get? You will get 806. Is that interest payable? Is that interest payable? How much is the interest payable? Interest payable, how much they have given? They have given 24,600. Is it right? 24,000. How much is the interest that has been accrued till March? Accrued till March. Accrued till March 31st March is how much? Accrued till for 31st March is 12,300. And how much is the accrual? Accrual corresponding to 1st December 2022, how much is there? 20,500. 20,500. How much will get? 24,600 plus 12,300 minus 20,500. It comes to how much? It comes to 16,000. See, interest paid is 16,400. Okay, 16,400. Fine. How much? What we have done? We have taken the operating profit, depreciation, amortization, premium, interest. Is that? Now, total this 715,500 plus 11,760 plus 1,300 minus 806 minus 16,400. It comes to how much? 711,354. Is it? This is called as adjusted trading profit before capital allowance. Okay. Now we have what we have to do? We have to do the capital allowance. Fine. Yeah, we have to do the capital allowance. Here we have to do the capital allowances. Now, how much is the capital allowance? Capital allowance we see, we will put it as note 1. Okay, we put it as note 1. I will do capital allowance somewhere. Okay, I will do capital allowance here. Okay, I will put this one. Okay, this is for the capital allowance. Fine. Now annual investment allowance. Okay, next special rate pool and allowance. See, very simple, straight wire. Okay, you will put it as additions. Additions. How much is the? See, the long life asset. Is it that they have mentioned here? Where they have mentioned, uh, they have mentioned, yes, it is a long life asset. Okay, long life asset. You have to mention long life asset. Okay, long annual investment allowance will be how much? Maximum 1 million. Is it right? 1 million. How much it is there? It is for 4 by 12. Is it right? How much is the long life asset? They have invested how much? 548. Okay. It is a maximum you can take. How much if you take for 4 months? It comes to how much? 333. 333. Okay. Fine. Now balance will be how much? See how much is the allowance? Allowance is 333. 333. Okay. Next, what is the balance? Balance is balance of special rate pool. Okay, balance of special rate pool is how much? For the first year allowance, it is going to be 21467. Okay, now do you have that enhanced? Is it right? We have the enhanced. How much you are going to take into consideration? The enhanced percentage is how much? 50% only. Is it right? 50% only. How much you will get? 50% of 214,667. It comes to how much? It comes to 107,333. Okay, 107,333 on a pro rata basis. Okay, on a pro rata basis. How much you will get? You will get 107,333. It is 334. Okay, 334. Fine. Now, okay, that's as simple as that. What is the now? What is the balance? Is the return down, total return down value carry forward is how much? Total return down carry forward is how much? In terms of special rate pool, in terms of special rate pool is how much? 107,333. Here how much you will get? Here if you take into consideration 766,044. Is right? This is the total allowance. Okay, total allowance. Go back to the capital allowance. How much is the capital allowance? Capital allowance is, as per note, it comes to how much? It comes to 440,667. Okay, 440,667. It comes to 667. Okay, it comes to 786,072. Okay, this is called as a trading profit. This is called as a trading profit. This is called as a trading profit. Okay, now what we have to take? We have to take property. Okay, we have to take property income. Okay, how much is there? We have paid rent. Okay, we have paid tenant paid rent. Okay, tenant paid rent. How much is there? Tenant paid means you have received. Is it right? It is. I can say rent received. Is it right? Rent received. How much is there? It is 15,600 times 4 by 12. Is it right? 15,600 times 4 by 12. How much is there? 15,600 times 4 divided by 12. It comes to how much? It comes to 5,200. Is it? We have paid insurance. Is it right? Insurance paid. We have to take only 4 months. Okay, we have to take only for 4 months. How much is there? 1,800 times 4 by 12. Is it 1,800 times 4 divided by 12? It comes to 600. Is it? Here, sorry, here it is how much? It is for 6 months. Is it right? We have to take 4 by 6. Okay, we have to take 4 by 6. 1 minute. We have to take 4 by 6. I mistakenly have written like that. 4 by 6. Is it right? We have to take 4 by 6. Sorry. 15,600 times 4 divided by 6. It comes to how much? 10,400 minus 600. It is, the net amount will be how much? 9,800. They have the chargeable gain. Is it? How much is the chargeable gain? Chargeable gain is how much? Chargeable gain is 104,300. Okay, 104. They have mentioned very clearly the chargeable gain is in respect of disposable investments. Point number 3. On 10th March 2023, no indexation allowance is available. Is that very clearly they have mentioned. It comes to how much? It comes to if you add 276.87, 9,800, 104,300, it comes to 384,787. 384,787. Okay, this is the total taxable profits. The total taxable profits. On this total taxable profits, what is the corporation tax? The corporation tax is at the rate of 19%. It comes to how much? It comes to 384,787 times 19. Okay, it comes to how much? 73,109, or you can say 73,110. Is that 73,110? Okay, 73,110. We have to be very careful whenever we are putting the things into consideration. Are you clear about this? Again, I will say what we have done. We have done we followed depreciation. We have followed the premium, lease premium. We followed that formula. We have taken that rent paid is for 6 months. We have taken for 4 months. Insurance they have paid for 12 months. We have taken for 4 months. Okay, and subsequently the chargeable gain. Is right? This is where we have to think over it. Are you clear about this? This is related to 10 marks. Fine. Now coming back to this, what they are asking us, that the directors of Harbour have realized that beneficial for the company to prepare accounts for the year ending 30th November 20 rather than 4 months period. The conclusion is based on the following information. Harbour will not purchase any plant and equipment. Already they have purchased, is it right? Already they have purchased, and they have the policy that they will not have any for, means annual expenditure limit. That's very important. Okay, expenditure limit we have to. So the full annual investment allowance, it has been given, is that of 1 million will be available in respect of long life asset, and machinery purchase is how much? 540. Harbour will sell an investment, and the disposal will result in an allowable loss. Allowable loss of how much? Allowable loss of 42,000. Is that what they are asking us? First, what they are asking? They are asking about tax evasion. Okay, tax evasion. This is point number B, working number 1. Okay. Tax evasion is illegal. Is it? And what will happen? It involves in reduction in tax. Tax, you have to be very clear. Tax liabilities. We are not providing complete information. Is that by not providing information. By not providing information. We are not providing information, and just we are evading that tax. Is it right? And we are very, see, you have to write very precisely. Is it? We are provide what we deliberately. Is it right? Deliberately we are providing what? We are providing false information. Okay, deliberately we are providing false. Is it? What is the tax avoidance? Is it? Tax avoidance. See, in the examination they will ask you this. 1, 2, 3 marks will be exclusively with respect to ethics. Okay. Tax avoidance is nothing but minimization of tax liabilities. Yeah? By use of any lawful means. Means we will come up with some options. Okay, we'll explore some options how we can avoid the tax. We'll try to make sure that yes, this option will work, that option will. We'll make sure that at any point of time we have to reduce the tax. Okay, this is very, very important. Is it right? What it says, if, is it right? If Harbour Limited, there are 3 marks. Is it right? You have to write minimum 3 points. Is it right? If Harbour Limited extends, is that if Harbour Limited extends its accounting period till accounting period what? Till accounting period of 30th November. Is it right? Is it? In order to save corporation tax. In order to save corporation tax. If then what will happen? The HMRC so will not treat, will not treat this as a, will not treat it as a tax, will not treat it as a tax evasion. Is it? Will not treat it as a tax evasion. Fine. Because it is lawful. Is it right? Because it is lawful. They are doing within the framework. Okay. They are doing the within the framework of the HMRC rules as such. Is it right? If Harbour extends its accounting period to save corporation tax. See what they are asking, you have to be specific to that point. Is it right? If they extend the accounting period in order to save corporation tax, then HMRC may not treat it as a tax evasion because it is lawful. You have to be very precise and you have to be very concise also. Fine. This is for the 3 marks. 1, 2, 3. We have written tax evasion. We have taken tax avoidance, and we have given the reason also. Is it? We have given the reason also. This is for point. The second one. Okay. The second one. What they are saying, if they are going for 30th November rather than first 4 months of 31st month, what is the revised figure of capital allowance? Capital allowance and chargeable gains. How much is the cash? When you are doing for a full year, is it right? When you are going for a full year exemption is 100%. Is that limit is how much? 1 million. Means full year it comes to how much? It comes to 100%. Is that 548,000 into 100%. Is it right? The capital allowance will be how much? It will be the full amount, the full year, the full amount will be available. Is it right? The full amount will be available. You have to write, is it right? Since it is for full year, it is a 100% exemption. Maximum amount is how much? Maximum expenditure limit is how much? The maximum expenditure. It has been given. See, these are the marks which you can score easily. Okay, this we can score easily. Next, second one, what they are saying, they are talking in terms of chargeable gains. Is that they are talking in terms of chargeable gains. When we are talking about the chargeable gains, how much is the chargeable gains is there? They have the chargeable gains of how much? They have a chargeable gains of it has been given. Is it right? It has been given. How much is there? 104,300, and they have the loss also. Is it right? They have a loss also 42,000. Okay. They have a loss also of 42,000. What we have to write? We have to make that company chargeable gains given given. Is it right? Chargeable gains given is how much? It is 104,300 minus. Is it right? We have they have a Harbour Limited will sell an investment on 10th April, because we are talking in terms of what? We are talking in terms of 4 months for the year ending 30th November. If we are taking the 30th November, then definitely this loss will be taken into consideration, because this loss, when it has been happened, it happened on 10th April. You have to give the reasons. That's very important. Why we are doing that? Is that you have to make what is the capital loss? Capital loss is going to be how much? 42,000. 104,300. It comes to how much? It comes to 300 it comes to 300, 2 and 6. It definitely, yeah. Chargeable gain will reduce to. Is it? Chargeable gain will reduce to. This is the way you have to work it out. Okay. Are you clear about this? How we have structured the things in a very systematic way. Okay. Structured the things in very systematic way. This is where we have to find out the thing. It's the easiest scoring segment for 15 marks. Okay. First we have taken the only thing is we have to be little bit careful with respect to the interest, rent. It is rent for 6 months receive, and insurance we have to pay for 4 months. That 4 months has to be taken into consideration all through the time, so that we should not have any confusion. Okay. Take care. Again, I will come up with another video which is going to help you to understand the questions for our upcoming examinations. Thank you so much. Best of luck.